What is going on, crypto peeps? Welcome to another edition of the Traveling Crypto. I'm really excited today, mainly because the World Cup starts and not really what is going on with the charts today. So if you follow me on the Discord, you'll see that on June 6th, I had sent out a market announcement about Bitcoin. And I was saying at that time we were at around 7,500. And I was saying that if we don't get any volume, because the volume was looking really sparse, and I was saying that if we don't get enough volume, the fact that the 100-day has crossed with the 200-day and fell below it, and the fact that we have low volume, we were in this falling wedge pattern at around 7,500, which was here. And I was saying that if we don't get enough volume, then we won't have enough momentum to break this resistance of this descending wedge pattern and see a breakout from there, because traditionally the descending wedge is actually a bullish pattern. And not only that, it's a pattern that usually signals reversals in a downtrend, right? So we are in a downtrend. We see this almost perfectly formed descending wedge pattern. And we see, Bitcoin test the resistance a couple times as well as the support. And we didn't have enough volume to push us past this resistance for a breakout. So I was saying that we could see a price drop from there. And it played out almost exactly as we drew it. As you'll see here, we were around there and we hadn't had this price action yet, falling to the support of the descending wedge itself. So we now see that we have fallen to the support of the descending wedge and actually have broken it. But today's green candle has pushed us just above that. So right now the the support is really the support of this descending wedge at around 6,300. Now I know that a lot of analysts, or I guess pseudo analysts, are predicting Bitcoin's demise, a drop to 4,000 before we bounce back up. Now, there are while that's certainly possible, I mean, the market always has a way of surprising us. There are a couple of scenarios that could play out here depending on what is being indicated. So, first of all, there is a bullish divergence between the price, which you see here. I'll change the color of this in a second to yellow. So you'll see the divergence between the price and the stochastic. This right here is a major bullish divergence, right? And it usually signifies that a reversal is up ahead. So the stochastic made a higher low, the price made a lower low, and that usually is a good sign for bullish momentum coming up. Now, couple that with the fact that we're in this classic descending wedge pattern where we do typically see a breakout from here, this could be a good sign. I was also taking a look at the short contracts on Bitfinex, so I'll unhide it here, and you'll see this blue line. I overlapped it with the chart. This right here are the short contracts on Bitfinex, and you'll see that back in mid-April, when we hit an all-time high in shorts, that actually caused a short squeeze. And I talked about that in a video, which I'll link here when I find it. But the short squeeze typically occurs when you have a high number of short contracts and the price momentum starts going upward. And it becomes like a snowball effect where either the short sellers are closing their short positions, right, because they want to minimize the loss of money, or the exchange is doing it for them, depending on how much margin or leverage they're allowed to have on that exchange. And it becomes a snowball effect where the more that the price moves up, the more short positions are closed. The more short positions are closed, the more the price moves up, because in order to close your short position, you have to actually engage in buy volume, right? Or you have to engage in purchases in order to close your short position. So the more the more buy volume we see, the more positive effect it has on the price. And again, it's like a snowball effect. So we are nearing that level here where we actually saw a spike in shorts, not quite to the extent that we saw back in mid-April, but more than we've seen since then, really. I mean, this is the second highest spike or second highest number of short contracts that we've seen since that short squeeze occurred. So what could actually happen is if we do get a healthy amount of buy volume, another short squeeze scenario could happen. Maybe not as drastic as this, where we jumped, it was like $1,300, I think, in terms of price in one day. But we still could see the same effect happening, and that actually spur the breakout from this falling wedge pattern. A couple of other things to take a look at: the RSI, right? We are at a majorly oversold level, and the on balance volume here. And typically, when we see these two indicators, along with a confluence of other indicators at these levels, you typically see a breakout from here, right? There isn't really much momentum that indicated on here that can drive the price further downward. Now, again, you could see the price fall, obviously. The next level that I have set up for the next level down in a bearish scenario that I have set up for Bitcoin is around the 5,800 mark, which is a classic support level stemming all the way back from November. But again, if we do get healthy amounts of volume, we could actually see a short squeeze scenario where the price then drives this upwards. Now, the extent of this upward movement will depend on volume. Once again, if we take a look at the overall market cap, we're still at an abysmal around 274 billion, right? And although we do see some of these alts in the last 24 hours in the green, this is pegged against BTC. We don't really see any new money coming in, right? This market cap is based on dollar price, not Bitcoin price. So a lot of, I mean, you'd have to go into each of these coins individually, which if you select one, so say like Monero is up 6%. If you click on Monero and you go to markets, you'll be able to see what pairing is the highest traded pairing currently. And most of that comes from BTC. You'll see a USD pairing here, but it's BTC, USD, BTC, Tether, BTC. So a lot of this is actually coming from traders converting their Bitcoin into Monero and not necessarily putting new capital into the market. And you'll see that replicated among some of the successful alts within the last 24 hours. One more thing I wanted to draw your attention to, going back to Bitcoin's chart, I'll hide the shorts, is the moving averages, where, again, if you follow me on the Discord, you'll see that I pointed this out. I also pointed it out in 3 or 4 videos in a row now so far, but you'll see this right here. This is the convergence of the 100 and 200 day moving averages. The 100 is the red and the 200 is the green. And so we see that the 100 fell below the 200. This is an EMA, right? Exponential moving average. We see that the 100 fell below the 200, and this was the first time this happened since 2014. And when this did happen in 2014, it lasted almost a year and a half. So, who knows what's in store for us, during this period. Obviously, then we had the Mt. Gox scenario going on, which we don't have today, but who knows how long this will last. I did scale into a few alts. If you follow me on the Patreon, you'll see that I did send out some trade alerts for a few moves that I'm currently doing. Nothing too drastic, but we could take a look at the analysis of some of these alts. So Icon being one of them. Icon is showing a lot of major bullish signs. So again, we see this major divergence between the price, the stochastic, and the on balance volume, right? So there's 2 oscillator indicators currently that are showing this major bullish divergence to us. It is moving towards the 10-day moving average right here, which is acting as the resistance currently. And we do see healthy volume coming in, healthy buy volume coming in, at least paired against BTC. Long-term, I am bullish on Icon. They are coming up with their token swap soon, and Binance did actually announce support for that, native support for that token swap. Moving on to VeChain. VeChain has their mainnet coming up at the end of June. Currently, it is taking a beating, right, after hitting the resistance of this bull flag right here. Now, we're still technically within the bull flag that it was forming. So the price of VeChain can actually decline all the way down to around 43,000 sats before it hits this support of the bull flag again, right, before jumping back up. Another thing to keep in mind with trading is you don't always have to try and find the bottom, right? I mean, you could wait for breakouts. You could wait to see if VeChain does retest this support level of this bull flag. It's a very viable strategy. You don't always have to, try and scale in or find the exact bottom. You could wait for breakouts, and the prudent strategy would actually dictate that you do wait for breakouts before re-entering or rebuying into a position. Lastly, we'll take a look at Ethereum Classic. As you guys know, Ethereum Classic has Coinbase has announced that Ethereum Classic will be added in some capacity. They didn't specify how, but in some capacity to their platforms. As you know, Coinbase has been rolling out a number of platforms between Coinbase Pro, Coinbase Prime. They still have GDAX, and then there's the regular Coinbase interface as well. So in what form will they be rolling out Ethereum Classic? We're not entirely sure, but they're rolling it out in some way, shape, or form, which is good news for Ethereum Classic. And you see that is actually what spurred this spike here in volume and price. Now, paired against BTC, if you take a look, it's actually a ridiculous amount of profit potential if you assume that the all-time highs that we hit mid last year, actually, it wasn't during the end of 2017 run up, the famous rally that we had in the crypto market, but it was actually back in the summer, the altcoin summer that we saw last year. So if you use that as your viable target, there's actually a little over 300% potential gain in Bitcoin, in the Bitcoin pairing. So now again, just because it hit these previous levels doesn't mean that's achievable, but once it does get listed on Coinbase and you actually see that Ethereum Classic listing, we do expect a heavy rally in price. So if you do have room in your portfolio, or at least I'll speak for myself, in my portfolio, if there's room for a long-term hold, I can certainly justify buying some Ethereum Classic and just leaving it in there and seeing what happens over the next coming months, especially as the official announcement on Coinbase is made. Just a couple of news tidbits to get into before we end the video. You guys might have heard, but Coinbase Index Fund is currently open as of yesterday. So the minimum investment is $250,000, you'll see here. And the Coinbase Index Fund just allows you to invest in a basket of funds for the coins that are currently on Coinbase, the four that everybody knows: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. I wonder if there will be a repository where we can get some data on how many investors are partaking in this. Currently, there isn't any data besides, the price of the fund itself. And you'll see here, the price of the basket of funds is almost $3,000. Again, the minimum investment is $250,000, but it would be really interesting to see how popular this is and if it's something that is actually drawing in institutional investors or not. Another news story that is currently making a lot of headlines is there was a research paper, I think it was written, it was the University of Texas, but it basically, through statistical analysis, has concluded with a certain degree of confidence that Tether and Bitfinex manipulation were the reason behind the 2017 Bitcoin price highs. And I've actually managed to find the research paper itself. It's quite long, but it is really interesting. If you are a stat nerd like myself, you will find that there is actually quite a lot of truth to the data that they found. Now, the irony here is that we're dealing with crypto and blockchain, and because blockchain has a transparent nature and is immutable, all these things can be traced, which is hilarious, because one of the criticisms from the mainstream media about cryptocurrency and about blockchain is that it's hackable and that there's some sort of nefarious, shadowy operation going on behind a veil that you can't really detect. But it's actually more traceable than banking transactions, than traditional banking transactions. So through the research that these guys were able to do, it was successful partly because blockchain is transparent and because it's immutable. So all of these transactions between Bitcoin and Tether accounts are there on the ledger for people to find out. Anyway, I'll leave a link to this research paper in the description if you are interested in seeing it. But basically the main conclusion, and you'll see here, is by mapping the blockchains of Bitcoin and Tether, we are able to establish that entities associated with the Bitfinex exchange use Tether to purchase Bitcoin when prices are falling. And obviously, as we know, as was established from the Paradise Papers earlier this year, or it might have been late December, I can't remember, but some of the key people of Tether and key people of Bitfinex are the same people. The relationship between these two entities is already confirmed. Anyways, guys, that is it for this video. Leave a comment, subscribe, hit that notification bell, leave a thumbs up, please. If you got anything out of this video, it goes a long way. Subscribe to the Patreon for the weekly report and the trade alerts. Subscribe to the Discord. It's 100% free. Stay safe out there. Enjoy the World Cup. Peace.